In these times, having an investment portfolio is crucial, as it not only allows people to increase their income, but also helps them to be aware of the cash they have. Managing an investment correctly can become quite a challenge, and for this reason, it is very important to know what type of accounts can be opened in these cases. Do you know the ETFs or negotiable funds? Are you interested in investing under this modality but do not understand how they differ from index funds? Welcome to Businessman Investor, your finance channel. As I told you at the beginning of the video, there is a wide variety of funds in which you can invest your money. Not all of them have to do with big-name companies or businesses that have a moderate reputation in their sector. So today, I am going to talk about those funds that focus on secondary equity markets. These are ETFs or exchange-traded funds. Let's know more about them. What are ETFs or exchange-traded funds? While it is true that ETFs belong to the investment industry, we must be clear that ETFs are not like other types of products. In fact, ETFs are distinguished by being a set of assets, which usually appear on the stock market lists. These companies are not usually at the top of the market, but that does not mean that they are worth less or that their efficiency declines. In reality, ETFs are excellent investment tools that are generally distinguished by two principles. The first, and one could say the most important of all of them, is the diversification of investments. The second has to do with its costs, which are much more comfortable than in other cases. Because exchange-traded funds are typically a collection of open-ended investment companies, they jump right into stock trading, and their marketing can be somewhat poor, at least individually. In itself, the appeal of these investment accounts has to do with their asset allocation, their ease of management, even when dealing with a considerable number of investment chunks, and their low cost. So that you better understand how it works, I will give you an example that will surely help you in this section. Imagine that ETFs are a football team. Within it are midfielders, forwards, goalkeepers, and other players, and as each one specializes in a specific position, the group could be said to have a good balance and diversity. In the case of ETFs, the companies within the fund are the players and their position within the investment, their positions. We can find diversified businesses with stocks, bonds, commodities, and more, and they all move as a group to go after the ball, which would be to match their performance so that it is as similar as possible to the expected earnings. They are put into an index fund. Understanding that, you can now see the importance of having a diversified portfolio, something that, of course, ETFs can give you with the open investment companies, the shares, and the dividends that they usually manage. Exactly the same thing that we can see within the index funds, although with a different practical model. Advantages of having ETFs. Although exchange-traded funds are not quite like index funds in many ways, they too can provide you with a fair amount of benefits while you put your money to work. Among the advantages that we can see are: Number 1. Diversification in investment portfolios. When new assets are introduced into a portfolio, investors are not only given several options for growth and income, but also ensure that cash keeps moving even if they are not fully aware of it. That advantage can only be in some sources of passive income, so if it occurs, it is best to use such opportunities to increase profits. Hence the importance of having a considerable amount of investments in our portfolio. Even so, I recommend that you first consult with a professional before purchasing certain assets, as this will allow performance opportunities to be maximized. Number 2. Predictable performance. Thanks to the nature of ETFs, clients are more likely to obtain a benefit at the monetary level. Why? Because as we go deeper into them, we can realize that their returns are forecast in a more accurate way. This when compared to other investment methods. Number 3. ETFs provide a more transparent view of the landscape. By showing how the underlying investments are executed, ETFs provide a much broader view of that type of activity. Of course, many people have benefited from this. Why do they enter the world of this type of liability from a customer-friendly investment tool? Number 4. Variety in the market. Following the example of soccer, ETFs provide the same variety that can be seen in a team of this type. By having a wide range of prospects in a single fund, investors do not have to choose between one and the other, but only need to look for a traded fund where the companies of their interest are located to start investing on all of them at the same time. This not only saves time in reviews, but also allows clients to analyze the performance of that fund more effectively. Number 5. Simple operations to perform. One of the most distinctive attractions of ETFs is their liquidity. Thanks to the fact that they are able to transform an investment into cash with precision and speed, in addition to the fact that the value of the capital is not lost, they become an excellent option for those people who seek to enter the world of investments in a safer way and obtaining income commensurate with the amount. As their behavior is similar to what we see with shares, they can be bought, sold, and transferred to other accounts as long as you are in the time slot of the market in question. Number 6. Cost reduction. Although we already saw this advantage in the first block, it is worth noting that ETFs tend to have a much lower cost than mutual funds. This provides higher performance, and the impact of the savings becomes a completely measurable number. And with that last point to highlight, we begin to close today's video. Now that you know more about ETFs, I recommend that you delve into those investments that you are interested in making under this format. Take advantage of the end of the year and give yourself a passive income that adds some money to your current figures. You will see that, as time passes, you will receive excellent benefits thanks to this action. Leave your comments on the topic, and when you're done, don't stop subscribing and press the like button, so that YouTube continues to recommend the content that I share with you. Do not miss the rest of the videos that I will be uploading in the coming weeks, especially the next one where I will talk about the 5 safest index funds to invest. Now, yes, it's time to go. See you and continue with your good financial health.